Hedera HBAR, one of the most polarizing cryptocurrencies inside space right now. How did it manage to become one of top 20 most valuable currencies with just 7 years long history is exactly what you will know if you watch until the end. And even if you don't know anything about world of cryptocurrencies, you will be able to follow because every video on Bitcoin Academy is 100% beginner friendly. So you might want to consider hitting that subscribe button. All right, enough wasting time. Let's dive in. When Hedera Hashgraph was first introduced in 2018, many people thought it was just another project trying to grab attention in the rapidly growing world of crypto. But Hedera immediately stood out because of its founders and its bold claim that it wasn't even a blockchain at all. The project was created by Dr. Lehman Baird, a computer scientist with a background in mathematics and cybersecurity, and Mance Harmon, a tech executive with experience in government and private sector systems. Together, they promised a network that would be faster, more secure, and more efficient than anything that had come before. While most cryptocurrencies at the time followed the same model as Bitcoin or Ethereum, using something called a blockchain, Hedera said it would take a completely different path. Instead of stacking blocks of transactions in a chain, it relied on a technology called Hashgraph that would process information in a more parallel way. For beginners, think of it like this. Imagine blockchain as a line of people waiting to buy tickets at a theater, one after another. Now imagine Hashgraph as hundreds of people using self-check-in kiosks at the same time. The idea was that this parallel processing could give Hedera far greater speed and efficiency than traditional blockchains, without sacrificing security. At the time, this was a radical claim that sparked equal parts excitement and skepticism. Some wondered if Hedera was overselling itself, while others believed it could be the foundation of the next big leap in distributed ledger technology. Either way, the project's launch wasn't clickbait. It truly was something different, a system built not just to follow in the footsteps of Bitcoin and Ethereum, but to try to create an entirely new lane for itself. That daring beginning is why Hedera is still one of the most talked about cryptocurrencies today, and why it quickly gained attention as a project worth watching. What really separated Hedera from the rest of the crypto space in its early years was the introduction of its underlying system called Hashgraph. Unlike Bitcoin or Ethereum, which rely on blockchains where transactions are bundled into blocks and added one after another, Hedera uses something known as a directed acyclic graph, or DAG for short. For beginners, you can picture blockchain like a single highway where cars line up and move in order. A DAG, on the other hand, is more like a network of roads where many cars can move at the same time without waiting in a single line. This design allows information to flow more freely and lets transactions be confirmed much faster. Hedera's Hashgraph uses a process called gossip about gossip, where computers in the network quickly share bits of information with each other in a way that spreads like wildfire. This ensures that everyone knows about every transaction almost instantly, reaching what is called consensus, which simply means agreement across the network. The benefits were clear. Hashgraph promised thousands of transactions per second, near real-time finality, and far lower energy use compared to proof-of-work systems like Bitcoin, where miners burn electricity solving puzzles just to validate blocks. It also offered fairness by randomly ordering transactions rather than allowing those who pay higher fees to jump ahead, which was a common issue in Ethereum. But alongside the excitement came skepticism. Critics pointed out that while the technology looked good on paper, it wasn't as battle-tested as blockchains that had already been running for years. Some also worried about centralization, since Hedera controlled the code and patents for Hashgraph, raising questions about whether it was truly open to the public like Bitcoin. Still, this period set the stage for Hedera's reputation as a project that was not afraid to be different. By 2019, the message was clear. Hedera was not just trying to build another cryptocurrency. It was attempting to prove that blockchain itself might not be the only way forward. In 2019, Hedera introduced one of its most unusual and controversial features, the Governing Council. Most blockchains at the time were run either by a loose group of community validators or by a foundation with heavy influence. But Hedera decided to create a structured system of corporate governance. The idea was to bring in up to 39 major global companies and institutions, each with equal voting rights, to oversee the direction of the network. These were not small players either. Early council members included names like Google, IBM, LG, Boeing, and other multinational corporations with proven track records in technology and finance. The council members were tasked with making decisions about software updates, treasury management, and overall policy for the network. For beginners, you can think of it like a board of directors at a company, except here the board was spread across the world and consisted of some of the largest enterprises on the planet. The positives of this model were easy to see. Having household name corporations in charge gave Hedera credibility that few other crypto projects could match. It also promised stability and long-term vision, avoiding the chaotic governance battles that often plague decentralized projects. At the same time, though, critics were quick to call this corporate control rather than decentralization. Many in the crypto community argued that handing governance to a council of big companies went against the very spirit of blockchain, which was supposed to reduce reliance on powerful institutions. Supporters countered that Bitcoin and Ethereum, while decentralized in theory, were still dominated by a handful of large miners or developers. So Hedera's model was simply a different kind of transparency. The truth is that the council model was a bold experiment. It gave Hedera legitimacy in the eyes of enterprises and governments, but also created a reputation as the corporate crypto, a label that would follow it for years. By the end of 2019, Hedera had positioned itself as a network with unique governance, loved by some for its trustworthiness, and dismissed by others as being too centralized. After establishing its governance structure, Hedera launched its native cryptocurrency, HBAR, in 2019. Like most crypto launches, there was excitement around the token because it was the fuel of the entire network. HBAR was designed to pay for transaction fees, secure the system through staking, and reward the nodes that process transactions. In simple terms, it was the oil that kept Hedera's engine running. At first, the listing of HBAR on major exchanges generated buzz and drew in retail investors who were curious about this new kind of network that wasn't based on blockchain. Hedera also began forming early partnerships that showed off potential use cases beyond speculation. Companies explored using HBAR and the Hashgraph network for supply chain tracking, digital payments, and even gaming applications where speed and low fees mattered. For example, in supply chains, the ability to confirm product movement in real time promised more transparency for industries like food or medicine, where knowing exactly where goods are at any given moment is crucial. In gaming, developers were intrigued by Hedera's capacity to handle thousands of small transactions with almost no delay, something that traditional blockchains struggled with. However, despite these promising examples, the token's price did not live up to the hype in its first year. After the initial surge, HBAR's value dropped significantly, leading many early investors to feel disappointed. This was partly due to the large amount of tokens being released into circulation, and partly because mainstream adoption of Hedera's technology was still in its very early stages. Retail traders often expect quick profits, but Hedera's strategy was centered on building enterprise adoption over the long term, which didn't translate into immediate market excitement. This rocky start created doubts among casual investors about whether Hedera could really compete with more established cryptocurrencies. Still, the launch period was important because it showed that Hedera was serious about real-world applications, and not just about creating a speculative coin. By the end of 2020, HBAR had found its place as the backbone of the network, even if it hadn't yet captured the attention of everyday crypto users in the way some of its rivals had. The years 2020 and 2021 were a wild ride for the entire crypto market, with DeFi projects exploding in popularity and NFTs creating a frenzy of speculation. But while much of the industry chased hype and retail attention, Hedera stuck to its original plan of focusing on enterprise solutions. Instead of trying to become the hottest place for meme tokens or yield farming, Hedera positioned itself as the infrastructure layer for serious businesses. One of the standout partnerships during this time was with Avery Dennison, a global supply chain company that used Hedera's network to bring transparency to product tracking. The project, known as Atma.io, allowed companies to monitor billions of items in real time, from clothing to consumer goods, showing exactly how Hedera's speed and efficiency could work at a massive scale. Hedera also supported apps like Helix, which aimed to bring decentralized finance tools such as tokenized assets and stablecoin payments to businesses and individuals. This was different from the Wild West of Ethereum DeFi platforms that often collapsed due to hacks or poorly designed code. Hedera's approach was slower but more disciplined, targeting users who valued stability and compliance. While this enterprise-first strategy gave Hedera credibility among institutions, it also came with a cost. Retail investors looking for quick gains often ignored Hedera because it wasn't the network producing viral NFT drops or meme coins. As a result, HBAR's presence on social media and in speculative circles was smaller compared to Ethereum, Solana, or even Dogecoin. Still, the ecosystem quietly grew in areas like healthcare records, micropayments, and tokenized assets. For beginners, tokenization simply means turning real-world items, like property or carbon credits, into digital tokens that can be tracked and traded online. Hedera proved it could handle these use cases with unmatched efficiency, but its choice to prioritize enterprise adoption made it less visible to the average crypto enthusiast. This period highlighted the split personality of Hedera. It was gaining respect in the world of corporations and developers, but it struggled to capture the imagination of the broader retail crypto community that often drove market trends. By 2021, Hedera's enterprise-focused strategy began to pay off, as some of the biggest names in technology and business validated its credibility by joining or expanding their involvement with the governing council. Google Cloud became a council member and integrated Hedera services into its cloud marketplace. IBM continued to explore applications for supply chain and financial solutions. And other global players like LG and Boeing added weight to the network's reputation. For beginners, a council member is not just a symbolic supporter. These companies actually operate nodes on the Hedera network and have a vote in decisions about upgrades and governance. The presence of such household names gave Hedera a level of trust that few other crypto projects could claim. It signaled to enterprises and governments that Hedera wasn't a speculative toy, but a platform built for real-world adoption. This credibility opened doors to more partnerships in areas like cross-border payments, digital identity, and supply chain management. At the same time, though, this reliance on big corporations also raised important questions. Critics argued that if the network's future depended so heavily on council members, then Hedera risked being too centralized and too dependent on a handful of institutions. Some skeptics even suggested that without these corporate backers, Hedera might struggle to attract users on its own. Another challenge was whether the impressive list of partners translated into real usage of the HBAR token. While enterprise adoption sounded great, many of the integrations used the Hedera network for transaction processing, rather than relying directly on HBAR demand, leaving retail investors questioning whether the token would see long-term value growth. Still, the period between 2021 and 2022 cemented Hedera as a serious player in enterprise blockchain, with partnerships that most other projects could only dream of. It showed that Hedera had carved out a niche as the network trusted by corporations, even if it meant being less popular with retail traders chasing the next big speculative trend. In 2022, Hedera began pushing its environmental advantages to the front of its narrative, positioning itself as one of the greenest networks in the industry. Unlike Bitcoin, which still relies on proof-of-work mining that consumes huge amounts of electricity, or even Ethereum, which only transitioned to proof-of-stake that same year, Hedera's hashgraph consensus was already highly energy efficient. A single transaction on Hedera used a fraction of the electricity of a Visa swipe and many thousands of times less than a Bitcoin transfer. This became a powerful selling point as companies and governments around the world were increasingly under pressure to meet sustainability goals and adopt ESG, which stands for Environmental, Social, and Governance standards. Hedera went a step further by purchasing carbon offsets, which are credits representing investments in projects that reduce or capture emissions, in order to declare itself carbon negative. In simple terms, that meant the network claimed to remove more carbon from the environment than it produced through its operations. This narrative caught the attention of enterprises looking for clean infrastructure, and even some government organizations exploring blockchain for climate reporting and green finance. One example was Hedera's role in tokenized carbon credits, where environmental assets could be issued and tracked transparently on the network, ensuring accountability in an industry often criticized for double counting and lack of oversight. While this sustainability focus gave Hedera a unique identity, critics argued that the marketing was stronger than the grassroots adoption. They pointed out that being carbon neutral was great for image, but did not necessarily bring in new developers or retail users who were more focused on DeFi and NFT opportunities. Some also felt that Hedera was leaning too heavily on environmental messaging instead of addressing the slow pace of ecosystem growth compared to Ethereum, Solana, or Avalanche. Still, in a world where environmental impact matters more each year, Hedera's efficiency and carbon-negative status positioned it as a blockchain alternative that aligned with global sustainability goals. Between 2022 and 2023, Hedera focused on proving that its technology could do more than just power fast payments. The network rolled out important upgrades that expanded its functionality into areas like smart contracts, tokenization, and NFTs. Smart contracts are pieces of code that run automatically when certain conditions are met, like a vending machine that delivers your snack once you insert money. Hedera integrated smart contract capabilities through its Hedera Smart Contract service, which allowed developers to build decentralized apps and automate complex agreements directly on the network. Alongside this came the Hedera Token Service, a tool that made it easy to issue custom tokens representing anything from loyalty points to tokenized assets such as real estate or carbon credits. NFTs also entered Hedera's ecosystem during this period, giving creators and businesses the ability to mint unique digital assets with extremely low costs and fast confirmation times. These upgrades opened the door to real-world applications in industries like healthcare, where secure and fast data exchange is critical, and in finance, where tokenized payments could reduce settlement delays. One notable example was Hedera's involvement in tokenized carbon credits, where environmental assets could be issued, tracked, and traded transparently to ensure authenticity. Despite these advances, Hedera still faced challenges. While it was technically capable of running DeFi protocols, it never developed a strong DeFi community like Ethereum, Solana, or Binance Smart Chain. This meant that while other blockchains were buzzing with trading, lending, and yield farming, Hedera's activity leaned more toward enterprise and institutional experiments. Critics said that without vibrant grassroots adoption and user-driven hype, Hedera risked being overlooked by retail investors. Supporters countered that slow but steady growth in serious industries would give Hedera long-term staying power. In the end, the 2022 to 2023 period showed Hedera's determination to expand its toolbox and prove it could support diverse use cases beyond payments, even if mass adoption was still an uphill climb. As Hedera entered 2023 and 2024, regulation became one of the biggest topics across the entire crypto industry, and Hedera leaned into this by branding itself as regulation-friendly. Unlike some blockchains that resisted oversight and operated in gray areas, Hedera emphasized compliance, transparency, and cooperation with governments and regulators. This approach made it attractive to enterprises and institutions who needed legal clarity before committing to blockchain solutions. But at the same time, it slowed down grassroots adoption. Many retail traders prefer the fast-moving, permissionless ecosystems of networks like Solana or Ethereum, where innovation often runs ahead of regulation. To them, Hedera's compliance-first posture felt cautious, even restrictive. Market volatility added another layer of difficulty. Despite partnerships with global companies and real-world use cases, HBAR's price remained highly volatile. It surged during bullish periods when enterprise announcements were made, but dropped sharply whenever broader crypto markets faced downturns. This reinforced the view that Hedera's fundamentals were strong, but that the token still behaved like a speculative asset rather than a stable, enterprise-grade utility. Critics questioned whether Hedera could ever translate its impressive partnerships into sustained demand for HBAR itself, while supporters argued that regulatory clarity would eventually put it ahead of competitors facing lawsuits or bans. The debate highlighted the tension at the heart of Hedera's strategy. It wanted to be the safe, compliant infrastructure for the digital economy, but in doing so, it risked alienating the very crypto community that often drives momentum and adoption. By the end of 2024, Hedera found itself in a unique position, trusted by big names, but still fighting to win over retail investors, a balance that left its long-term fate uncertain. Here in 2025, Hedera stands as one of the most unusual projects in the entire crypto landscape. On one side, it has delivered on many of the promises made back in 2018. The network remains incredibly energy efficient. Its hashgraph technology consistently handles thousands of transactions per second, and the governing council of multinational corporations continues to give it a level of enterprise trust few other projects enjoy. Use cases like supply chain transparency, tokenized carbon credits, healthcare data management, and cross-border payments are all active on Hedera, proving that its vision of real-world adoption was not just marketing. On the other side, Hedera is still struggling to capture the attention of everyday crypto users. The HBAR token, while essential for transaction fees and securing the network, has not yet become a favorite among retail traders or DeFi communities. Unlike Ethereum, Solana, or even meme coins that thrive on cultural momentum, Hedera's growth depends largely on enterprise partnerships and long-term infrastructure building. This makes it look less like a buzzing public blockchain and more like a digital utility grid that works quietly in the background. For beginners, it helps to think of Hedera like an airport runway. Without it, planes cannot take off or land, but passengers rarely think about the runway itself. The same is true with Hedera. If its adoption continues to grow, people may one day use services built on Hedera without ever realizing it. But if enterprises lose interest or move to other platforms, Hedera risks fading into the background as just another experiment that never reached mass adoption. In short, Hedera in 2025 sits at a crossroads. It could quietly become a trusted piece of global digital infrastructure, powering systems behind the scenes, or it could remain overlooked as the corporate chain that never won over the retail crowd. Either way, by watching until the end of this story, you now have a balanced picture of both its strengths and its risks, and a deeper understanding of why Hedera is one of the most polarizing names in the entire crypto industry. And just like that, we've reached the end of Hedera's entire story. Today, you learned how Hedera went from a bold idea in 2018 to one of the most unique and polarizing projects in all of crypto. If you want to keep learning, make sure to check out one of the 2 videos that just popped up on your screen right now. And of course, don't forget to subscribe, like, and leave a comment down below to tell me what you think about Hedera. I'll see you in the next video. Goodbye.